Okay, I want to do a quick breakdown on the dollar and the current positions I'm in. So, swinging EU, been in it for 10 days now. Monday will be the 10th day, which is insane for me. I remember not being able to hold trades for 2 days or any length of time. Every time I'd be in a position back in the day, and I would hold it overnight. Just be getting up at all hours, setting alarms, seeing myself in profit, waking up at 4 London, seeing a pullback, closing out, and just thinking, fuck this, just feeling so beaten up. And putting it down to the fact that it was long-term trading, long-term, like holding over multiple days, when in reality, I just couldn't see my trades to fruition. I couldn't hold. Didn't have the conies. So then in this one since Wednesday, so Wednesday, Thursday, Friday, Monday will be day 4. Looking to get a 200% expansion. So we're expanding this range here. So we just reached 100%, looking to take it to 200% of the original range. And that lines up with this decision point. So I want to place my take profits. So use the range expansion as the target, and then look to see what decision point is there. So we're close to 2 decision points. One is this resistance area, daily resistance, and the other is this liquidity area here, so this high. So this high is closer to the 100% expansion, so that's where I've got my take profit. This is the dollar. So I just did a full breakdown and my laptop died, so that's what this analysis here is. But basically I was just explaining the same thing. So let's go down to the 1 hour so we can look at it. So I'm always expanding a particular area, a particular consolidation, or more so a particular high low like this. So a V top, V bottom, V top, a seek and destroy when they go up, down, up, down. Large inducement swing, they get swallowed up. That to me is what I look for to signify level 3. So that's level 3 behavior for me. So I have to see a divergence on the 1 hour as well. So while this is making lower lows down here, we're making higher highs. So this price goes lower on the chart and price goes higher on the RSI, on the TDI. So that to me is telling me that we have divergence there. So therefore, this has ticked that box, is primed for a reversal. So I don't try and trade that. I just wait for that to happen. And once we have divergence on the 1 hour, and then we get level 1 behavior, level 1, get the fuck out of there, then I'm looking for the pullback. I'm looking for a W on the EMAs. So I'm only looking to enter after the 13 and the 50 have crossed. And then I'm looking to trade the W on the EMAs. So my entry is based off the TDI. So I want to look at and see the W. So here I have this drawn in. I want to see a W print either 2 pierces, 2 breaches of the blue band here, signifying it's oversold. But that doesn't matter. Just I'm looking for 2 breaches, so a W down here. It can be a W like this, or a W. So the W where this one is higher, or this one can be lower. Doesn't make a difference. We just want to see 2 breaches and a W. Once price crosses the green line, the red, so once the RSI crosses the green line, that's our first confirmation. And then if we want to be extra secure, once price And once the RSI crosses the baseline on the hourly market here, and that gives us our entry. So on that candle closure, that's our entry on the hourly. So that happened here. Price is actually gives us the same entry on the TDI and the EMAs. So on the EMAs, we're waiting for the hourly to close above the EMA, and that ties in with here. So that's our entry. Stop. Then we're looking at 25-point increments. So price moves throughout boxes of 25s. 25 points here with 25, and then we want to give it some breathing room, at least 10 pips. So I'm going to say at least 35. That actually very nicely ties in with, is this the 50% mark? This is a smaller range I'm looking at. It's this range here. Ties in with the 50% mark. So, but even if that wasn't there, it doesn't matter. I would still be putting my stop with lots of breathing space, using 25 or 50-point increments, and then giving it some breathing space in case price wants to wick into those areas. And then take profits, measuring the ranges like we just mentioned. So short term take profit would be different to this one. This would be measuring the whole range. I'm going to do it in blue so we can look at it clearly. There we go. So we're measuring high to low of that inducement behavior. This is a 100% expansion. This is a 200% expansion. So you're measuring using the 100% expansion. This is where you put it. This is like the ideal take profit. But then I want to do it at decision points around that area. So this is the larger high-low on the 4-hour. So price could, this is a decision point. Price will use this area to either break out, retest, continue, or break out and reverse. So I'm going to, in this sense, using this analogy, this is the dollar. We can't actually trade this, but this is my logic through where I'm placing my take profits. It's at using the 100% expansion as the baseline and then looking for decision points. So the decision point here I'm using is these 4-hour top of range. So it's a daily range. No, what range is it? It's 4-hour range. So this high and this low. This is the initial range, and then price breaches both sides. So once we have a large range, what I'm looking at is the peak formations, and then I'm looking for price to trade into either the peak formation high or the peak formation low that's created. And they're my decision making areas. So we have an initial range, so price makes a low and a high, and then likely price will either breach or trade into both of those, creating a new range. So they typically put in a high, put in a low, and then extend that range. And then I'm looking at the new peak formations as my areas of interest. So this is peak formation 2, this is peak formation low 2. So price trades into that area. There where I'm looking to take my trades from. Bit of a side note there. But yeah, that is just, so now we're currently in this high low box. So we have a peak formation high, peak formation low. I'm waiting to see how price treats these peak formations. Will it extend the range, break out of the top, break out of the bottom? Or will we trade into one of these peak formations? This is the high, this is the low. Put in a W behavior, get our entry signal W on the TDI, and then cross over the baseline, or else put a W in on the baseline. Who knows? Let's see what happens when Monday opens. So in these shorts, see what same thing. So this is just the inverse. So I'm looking for the exact same thing. Price to breach out 2 times outside of the blue line. If we get across the green, the RSI with the RSI, pardon, first entry signal, and then once we cross the baseline, I'm in the trade on the hourly, that is. So that will likely tie in with a M structure on the EMAs. So that's what I'm waiting for Monday morning. Don't know which way they're going to go first, but that's what I'm waiting for it to enter. Looking for my M behavior on the 1 hour, and then the TDI cross, which will likely tie in with the EMAs. And then, yeah, first target, these lows down here, and then second target for this entry up here, down here, 245 big ones. That's a little bit far. But anyways, yeah, I have it on my MT4 as this low. I can't remember whether it was the last video or this one where I covered my entry into this trade. As I said, the laptop just died and I lost everything. But I had this area here, so price rejected off of the daily zone. So I'm using the daily zones and then the EMAs on the lower time frames for entries. So super, super simple, super back to basics strategy I used years ago, and then naively, egoically decided to switch it up to get more RR, get into fine trades where price was primed to explode, super tight stops, all just egoic trading. And more RR does not mean more money in your bank. So since I've been back swallowing the ego, look at this, 94 points. It's in around this area, like 89 to 95 points is my stop loss. My ego wouldn't have accepted that years ago. And the funny thing is, me accepting this is what's now enabling my trading. I originally passive funding challenge with 0 losses. My trading has never been more accurate. It's the wrong word. My win rate. It's not even win rate. It's just consistency rate. Consistency throughout trading. Because look at this. These last 2 trades, they're both losses, both following this same strategy. But all of them have been held either to fruition following the plan. And it's clear what the plan is because it's simple. And yeah, you can go a whole challenge, 5 trades, no losses, and then you can get 2 losses in a row. As long as I keep taking the same setup, these 2 losses now have been counteracted by this one win, which I'm entered in 3 times. 3. So stop. I moved it down to here. It doesn't change my risk to reward. I've just taken my stop down and then re-entered on Tuesday and then re-entered on Wednesday based off of this entry criteria. So rejecting the EMAs and then baseline crosses on the TDI. So let's see what Monday will bring. This position and this position are both in profit. This one, as we can see, in about 0.2% of drawdown. So yeah, let's wait and see if we get this second pierce out of the blue band, which will also look like a M structure, rejecting the EMAs. And then once we cross over, once the RSI crosses the baseline, I'm in. Nice one, guys. I'm going to leave it there. Go enjoy some strawberries.